gold, it's clawed around half of its losses from that crash last week. It's clawed it back. Best week this year, but this is just bargain hunting, isn't it, from Asia? And that begs the question, does this have legs?
Yes, unfortunately I don't think it does. The big problem for gold, I think, is that you've had a big change in sentiment amongst the group of investors that have been big accumulators of gold over the last few years, and that's those who've been buying gold via exchange-traded products. Now, I mean, just to put it in perspective for you, we've had about 310 tons of selling of those products over the course of the year so far. That's equivalent to almost half of all the gold that's been mined during that period. Unfortunately, it's only about 10% of all the gold that's held in those kinds of investments. And unless we get fresh quantitative easing, I think that selling stays with us, and you're really only going to see this sort of bargain hunting and physical buying from China and India holding up that price decline for a bit before it resumes.
So the physical buying, the physical demand is just simply not enough to offset the outflows from ETFs?
It's simply not enough. I mean, there's been a bit of a structural decline in the long term in terms of physical gold jewellery demand out of Asia. And China, which had been growing really, really strongly, has slowed down a bit. Inflation's not quite what it was in China, so that urge to buy gold isn't quite there anymore. So, you've got this difficult sort of market balance for gold, I would say. I mean, the other thing that's over now, I think, as well, is the swing from central banks who had been big sellers to big buyers now. And that was a sort of 1,000-ton swing around, but that's over. So really the focus is very much on the ETP buying, on Western investors, whether or not they want gold in their portfolios. And at the moment, they just don't seem to want it.
Talking of the central banks, I mean, we had this big story, or perhaps non-story, about Cyprus in the last few weeks, about maybe they would sell gold, and people started to get concerned that other central banks, much larger holders, might sell gold. What's the feeling in the market about that? Is that a red herring?
I think it is to some extent, yes. I mean, let's not forget that there is an agreement between central banks on how much gold can be sold each year. But I think that in the context is important here, because we did see a big swing around in central bank attitudes towards gold. Let's put it that way, from quite heavy selling to in aggregate quite heavy buying. And I think what's happened in Cyprus is probably just making the market a bit nervous that really quite positive influence that we've had for the last few years may be starting to even itself out. So again, it's just another factor which, in terms of gold supply and demand balances, is pretty negative, and at the moment it's just very difficult to find many positives.